my God, we're back. Hello, everybody. It has
Yee-hee!
been a while. I'm the Badger, and this is a cryptocurrency blockchain technology podcast with my two favoriteest dudes in the whole wide world, Johnny Fry
Hello, good evening, good afternoon, good morning, wherever you are.
and James Ty Lee from Cyber FM.
I feel like I haven't gone anywhere though. I mean, has it been that long?
I know, right? 2024 has been a bitch of a year. Like I'm so excited to move on to 2025 because it can't even touch 2024.
Are you saying you can't go another 4 years?
Oh no, I can do that standing on my head. You know why? Because he only gets to do four more, and that's it.
Yeah.
Then he's done.
Unless he changes the constitution.
Well, good luck.
Because
Better men than him
I
have
heard
tried.
that Mr. Musk is going to change the constitution so they can elect him as the next one.
Oh, he's going to be busy trying to build that weird giant tube from New York to London.
Well, Badger,
I'll
good
be
to
the
be
first. Hey, I'll
good to be
visit
back.
Johnny.
I mean, if he can make it happen successfully, I'm in. I'll drive it in my brand new Jeep.
If it wasn't for that darn trench.
Yeah, a Mariana Trench.
Yep.
So-
Well, gentlemen, you know what? Let's start out with the basics. Let's talk about Bitcoin, because I think there's so much tribal knowledge out there. Let's get some real factual knowledge.
Badger, before we kick off, just to remind new listeners, this has been brought to you, and it's real. What we're trying to do is get people to think about digital assets and the use of blockchain technology in a slightly different way. We're not here to give investment advice. We're not here to give recommendations, but drawing on our combined knowledge experience in both the traditional markets, having worked in Wall Street and worked in the City of London across Europe. We're really trying to sort of point out some things that are going on that you might want to be interested in, but please don't take this as investment advice, and always speak to a professional advisor if you do. So that's just sort of a bit of housekeeping at the beginning. That's all.
Well, it's funny because that's
and super smart. Go ahead, James.
I was going to say that's part of the problem is that. So you talk about Bitcoin, you have no choice but to talk about money, right? You have no choice but to talk about value. You have no choice to talk about historical precedents, versus what's going on today. So when you talk about numbers, yeah, people could be like, "Oh, he's giving financial advice," and that's really not how it works. And I think a great example of that is how some people, if we talk about Bitcoin, they start thinking about gold, right? We hear people saying that Bitcoin is literally the same as gold; it's just digital gold. Well, how do you talk about gold and scarcity without talking about the fact that, like, right now it's $2,600 an ounce in the US, the US dollar, right? And gold has risen by like 26% just recently. It used to be gold was flat for so long, and it followed, maybe it was a hedge against inflation, but it stopped growing and now it's coming back. And that's what you're saying. Bitcoin is, you mine Bitcoin just like you mine gold. Gold is scarce, Bitcoin is scarce. So the idea, a lot of people, not us, a lot of people will say, well, Bitcoin should only go up in value, right? And then all of a sudden you get this fear of missing out, this FOMO.
Yeah.
Because they see gold. The same people that tell you gold will only go up, it's equally toxic, right? And I'm not saying it's not going to go up. Look at the loophole I just put myself in trying to be educational.
Yeah, and I think at the end of the day, we all know any fiduciary exploration holds risk. It all holds risk. We're here, and We're here to educate. We don't advocate for any one financial instrument over another. That is for your financial advisor to help you with. We're just here to put the information out there and get you best educated on what actually is the truth and breaking the mythos, because there is so much misinformation out there about digital currency and blockchain technology.
And that's how you get wrapped up, right? So you'd say, all right, well, we're saying that gold right now, is valued at over $18 trillion. And then you're going to hear somebody like me or Johnny say, well, Bitcoin right now is a 2 point some odd trillion dollar market. I know the entire crypto market cap is like 3, but so let's call it 2 trillion just for now. So somebody's going to say, wow, that's 20% of gold, right? And then they start creating this chart in their head. And what we don't want to be is we don't want to be someone like OpenAI, where we're caught telling a lie and everybody's relying on OpenAI, right? So factuality is very important. And God, with what's going on with OpenAI lately, what do you do if you go to OpenAI? You start talking about gold value, and OpenAI, Chat GPT, might say, well, this is what people are saying. Now you got artificial intelligence giving you financial advice. That would be not ethical at all, according to laws. Have you ever dealt with OpenAI at all?
I use it all the time. I use Chat GPT all the time, but I don't. But because I'm a researcher and I have a background in research, I don't get any of my factual data from AI. None, zero. Because I have to quote my source, and AI is not a quotable source because it's been found to not have factual data.
Yeah, Beth, I agree. As you know, I write digital bites every week, which is, focused in the areas we're talking about, sort of blockchain and digital assets. And I find OpenAI as a good initial, this is what I want to write about, this one to think, and then it comes back with stuff. Some of it I agree with, some of it I disagree with, but it's got very, very rarely you have any decent references, and it's often a little bit out of date. But James, I'll get back to what you were saying a minute ago, because I think this is really important. We've seen, obviously, the price of Bitcoin has gone up a lot. And, unfortunately, though, people have become myopically obsessed. And I think they seem to, I remember back in 2012 or 2015 when the price of Bitcoin was, $100 or $3,000. And God, if I'd have just put 10 grand in then, I'd probably not need to go to work anymore, and things like that. And because we've seen the price of an asset suddenly go up in value, and we've seen this in the past. We saw it with .com. You want to go back. We saw it with Tulip Mania with the Dutch, where companies and almost countries were bankrupt because they sort of went after something. But I think what we need to bear in mind is that when you're at the heart of capitalism, you take risks, and if you get on the right side and it works, then you can make a lot of money. But if you get on the wrong side, then you can lose money. And I don't think any regulation should be in place to remove risk, because if you remove risk, then you're going to remove the opportunity, and it's going to be very difficult to stimulate the economy and create the taxes. But every investment ultimately relies on one thing, and that one thing, in my opinion, is sentiment. And the more people that like secondhand cars, or we were talking to a guy earlier on, James, who is an international cellist, and he was telling us about the price of Italian string instruments that are sort of 300 or 400 years old and they've outperformed the stock market, he said. But if there's more people who want to buy something, the price will go up. And that thing could be Bitcoin, it could be gold, it could be the S&P 500. With this week, we saw suddenly the Fed turn around and said, perhaps the inflation rate is not under control. Bang, 1,000 points come off the S&P 500, because the sentiment is, maybe we need to price things in that we hadn't otherwise occurred. And so at the moment, we're seeing Bitcoin, yes, it's gone up, a lot. Yesterday, as we're talking today, it's the 19th of December. Yesterday, it came off suddenly by 8-9%. Well, go figure. That's what happens with a lot of asset prices. And that's what we've seen with gold. People have been going into gold and looking in their view, it's a safe haven where hopefully it's not going to lose its value. But ultimately, all assets are driven by supply and demand and turbocharged by sentiment. And you saw that in Wall Street, James.
Yeah, absolutely. And even when you talk about sentiment and FOMO, I love the word FOMO. The traders suffer the same thing as the professionals go through it just as much as as us.
Yeah, I mean, honestly, like, and there's so many ways that even the super novice like me can put a little bit into everything, right? So, non-sponsored, I use Robinhood. And we recently started using it a couple months ago. And it's one of these apps or websites where you can invest incrementally. And I think this is you can, you can invest $5 or you can invest $500,000. It's up to you. But I think the availability of these, because there's a lot of them out there, I think the availability of that for the layman like me is changing the landscape of investing because we feel like we can dip our toe in. And when I'm only risking lunch money, who cares?
Beth, I think it's one of the things which are most misunderstood. How by dollar cost averaging, putting the same amount of money in every week, every month, and then if the price of the asset is high, guess what? You don't buy so much. But if the price falls, you buy a lot more. And from an investing point of view, very few people take advantage and put money into regular savings, and those regular savings really, and this isn't giving investment advice, it's just common sense. You put your regular savings into something which is more volatile to get the advantage of dollar cost averaging or pound cost averaging or yen cost averaging or euro cost averaging, is all the same. And then once you've built up a lump sum of money, that's where you then put it into a more diversified, less volatile, less speculative type investments. But you want volatility. You almost crave volatility if you're going to do regular savings, which is why things like emerging markets and some of the commodities, some of the alternative funds, crypto, that's why they're ideal for just putting away a little bit, as you say, your lunch money, $5-10 a day, and just put that away and then forget about it. And that makes a huge amount of sense. The other one which people get wrong consistently is something called APR. And that doesn't mean you're going to pay it off in April. It means the annual percentage rate. And people, on credit cards, I think I saw something the other day. If you don't pay off your credit card with American Express, then I think it's 79% APR. 79%.
Well, yes, absolutely, because there is a misunderstanding about American Express that's existed for years. And that is a true American Express card is not a credit card. It is a debit card.
It's a charge
And
card.
when you make a purchase on it, you are contracted by American Express to pay it off in full on your bill. If you do not, then yes, you are charged an egregious amount of interest and get in trouble with American Express. American Express has other products that they've come out with that are credit cards, but the true American Express card is not a credit card. It's a debit card, and you have to pay it off monthly.
It's the same as radio, right? So we in radio, we bill our advertisers. Want to reveal secrets now, right? We're bad people. We bill our advertisers net 30, net 60,
Net 90,
right?
yeah.
Net 90. We're dumb. We're not charging them interest, but maybe you are. Side
Yeah.
FM, maybe we got to get into that at this point. Because when you bill them net 30 and they wind up paying you 60 days later, someone small like us were just fighting with them. Now you try it out with American Express, and all of a sudden you have a credit score issue. It's not really credit, it's fronted credit, but it's not divvied up credit. Like you're talking about with stocks, fractional trading is kind of like the revolving credit you talked about.
Yeah.
American Express is a loan.
But Beth, go back to the regular saving just to finish that off, just to give you some idea. If you saved a relatively modest sum, say $100 every month, and you just put that aside over just the last 3 years, that meant you'd have actually saved $3,600. Now, if your listeners are anything like me, you'd probably be thinking, well, blimey, $3,600 coming to Christmas, that's pretty good. That would help pay a big chunk of Christmas off. And you could have just put that in a tin under the bed. But had you put that into Bitcoin, it would now be worth $7,780. So you'd have more than doubled your money.
Absolutely.
But the real point is just if you put a little bit of money away, $100, what's that, $3 a day? So that's not even that's half the price of a coffee in America these days.
Correct. And the old adages are the best ones, right?
Well,
I mean, my dad. So I'm gonna bring up my pop because my dad was smart. He was a smart dude, and he used to say, if you flush your money down the toilet when you need it, you won't have a pot to piss in.
Wow.
Right, but that was his favorite saying. So he is the one that, and parents, I encourage you out there to do this with your children. Please, please, please. My dad sat down with me when I was a kid, and he would take my paychecks from me, and then he would sit down with me and we would write out all my bills, and then he would be like, okay, how much are you putting in savings?
Yep.
Because we've gotten out of that habit. This generation has gotten out of that habit. My dad was, you take 10% of your paycheck every payday and you put it into savings, because they lived through stuff like the Depression where they had nothing, and they were like, while I have it, I better save some of it. And we've lost that as the younger
credit's become so
generations.
easy to get, hasn't it? So it's so easy just to run up with credit and spend money that you don't have.
Yeah.
But if you look at in most countries, most people don't have any savings to fall back on for a rainy day. They just don't, because they've got a big mortgage, they've got credit card bills, they've got loans, they've got but buy now, pay later. It's all this thing is just encouraging you to have more and more and more in debt.
Well,
they're saying 1 in 4 Americans have less than $1,000 in say 1 in 4, less than $1,000 in savings. Incredible.
I guess I'm lucky because I'm married to a very old. Well, not yet. I will be in June. My fiance is a very old soul, and I literally, you guys, I realized I'm marrying my dad. He has that old school sensibility, and he is like, okay, got to make sure we put this in savings, got to make sure we put that in savings. And recently we were able to afford to go on vacation to Palm Springs in Arizona and see his brand new grandson. Welcome to the world of Sean. And my daughter, who I haven't got to see in 3 years, who works at a bougie restaurant in Arizona, Phoenix, Arizona. And but we were able to afford to do that because he had saved up that money all year. And that's what we spent. Not, it didn't go in credit. We didn't go into debt to do it. We had saved to be able to do that. That is lost on the younger generation.
Yeah.
Because my youngest, we have really honed his skills, and it's starting to change, because I think now we're focusing on it more. But that middle generation, they're like, woohoo, I'll just buy it today. I'll figure out some way to pay it off.
Well,
So I want to throw
Jen.
a match. I want to throw a match in the puddle of gasoline that is money. You ready?
Yep.
And I'm not changing the subject on you, but you brought up something that triggered me. I want to throw this match. Trump's coming back. Trump's back.
He's back.
He's
Trump
back.
is back. He's going to make America great again. So this whole America First thing he's got going on, everybody knows that 8 years ago, he was like, yeah, I know what Bitcoin is. That's cool. I like cash. Right. And everybody's like, all right, Trump hates Bitcoin. Time has gone on. I'm not saying either way. Time has gone on, and Trump's like, hey, learned a little bit about Bitcoin, and I see some benefit. And then he appeased us when he was running for president. He's going to pardon Ross Ulbricht, who's a big player in what made Bitcoin today. And if we go through the history of Bitcoin, like you said, in the past, Bitcoin was $3,000, $5,000, right? Before you knew it, we started getting ETFs, which brings in your old soul, right? Your husband and your dad would be like, well, I don't know much about this Bitcoin stuff, but I'll buy an ETF because it makes sense. So we got Trump doing that on paper. So the story goes. And he's pushing this big crypto, let's go legit, get a reserve. You think the newer generation is all hyped for Trump? Was it all because at first they hated him. Now we're being told they love him. I'm all for Bitcoin adoption. This man spoke on TV, and the volatility of Bitcoin just through the roof. Because like we were saying, when you dollar cost average throughout the years, we are at $100,000 today. And they're really saying Trump's championing it, right? Is that the word?
Yeah.
A strategic national stockpile to make, because America First, to the U.S., be the crypto capital of the planet. Meanwhile, you got the Securities and Exchange Commission going, get rid of Gary. You don't need a political view to want to get rid of Gary, if you ask me.
Yeah.
But just because of hindrance. But was he the straw that broke the seal? No. What broke the camel's back?
The camel's back.
What do you think? I mean, Trump is wild. Whether or not you get it, Elon speaks and Dogecoin moves, right?
Yeah. Well, I think we're dealing with unknowns, right? Like, we know that he is all over the map. Like, one day he thinks this way and the next day he thinks the other. But he has this core group of sycophants or followers or whatever that promote whatever he says like it's gospel.
Don't say the plurals.
Yeah. So, you know what? At the end of the day, we're just going to have to, get out your surfboards, dudes. Let's ride the wave, and just, I'll take a tasty wave and, just kind of surf it all the way through till the end. And at the end of 4 years, we'll see what's left.
Yeah, but look,
so
look,
go ahead,
this all goes back to, in my opinion, very, very simple. It goes back to sentiment. At the moment, yeah,
absolutely.
Trump has got a bigger voice than most, good or bad. That's just reality. That's what he's really good at. and he looks like he's being supportive of Bitcoin. Well, yeah, okay, fine. But then you just got to look at what's happening elsewhere. You've got to look at, as you've just said, James, Wall Street has now got exchange traded funds that invest in Bitcoin. Makes it very easy for mama and papas to put a bit of money into Bitcoin. And to be honest, it's a diverse asset. And maybe it's not a bad idea to have a little bit of money in something that's alternative. And through an ETF, it's super easy. But you've got other countries playing this. You've got El Salvador, where they've now got $1 billion worth of Bitcoin because they've been putting money. I think they're buying 1 Bitcoin every day. I know it's not a lot. Well, $100,000 is a pretty useful sum, but they're basing, we want to have part of our strategic reserves. You've got a parliament bill being put towards the Brazilian government, and they're saying we want to have this asset as part of our reserves. You've got Poland also talking about it. You've got the Korea's biggest pension fund. You've got Australia's biggest pension fund looking to buy Bitcoin by proxy by putting money into MicroStrategy. Now, you can say all these people are wrong, but I think there's this degree of FOMO, and they're saying, well, there's so much political uncertainty out there. And maybe, just maybe, Bitcoin will be an okay investment. Not expecting to necessarily double or triple or quadruple, because these institutions they're not looking for high risk investments. They're looking for diversification. So yes, Trump has given a boost to the crypto market, but I'd argue the biggest, and it was funny, I was actually asked to go into the House of Lords a couple of weeks ago to give evidence on digital assets. And unfortunately, the chair of that committee turned around and said, well, Mr. Fry, what's your opinion as to the economic value of Bitcoin on the UK economy? And this is the House of Lords. These are people that make the rules and regulations in our country. And I said, well, with the greatest respect, we're here to talk about digital assets. Yeah, but Bitcoin. I said, look, if Bitcoin was only $1, no one would be talking about it. We're only talking about it because it's price. What Bitcoin has done, not just for the UK, but globally, has opened our eyes to decentralization. It's opened our eyes to the fact that we can start democratizing, whether it's that cello I was talking about earlier on, whether it's getting access to private equity or private credit or real estate, things like fractional ownership, giving you that exposure. That's what Bitcoin, in my opinion, has really done. It's drawn attention to a new technology which can make things much fairer, much, much more transparent. And I think that case, Bitcoin's done us all a huge favor, whether you own it or not, because it's going to impact on your life, making payments, making investments, and making all sorts of information about your healthcare, about your insurance, your shopping. It's going to have an impact right across our economy. So for that sense, great, there's lots of chat about Bitcoin, because people then start to look behind the price and say, well, what's driving this? What's the technology? And I think that's really quite exciting to look at.
Absolutely. Well, gentlemen, we have the little ding bell is going off in the background because you all have to run off and get your day started, and I need to get my super suit on and go to my super secret squirrel job. This has been fascinating. I can't wait. It will be posted very soon, but you guys also do a podcast on the Cyber FM network. When is that podcast, guys?
Well, James and I do a podcast every week. We get all sorts of interesting people from all sorts of, we've had ladies from Korea talking about investing in the crypto market over there. We had a chat from Germany earlier on today. We had Nathan, who's from Australia. So that comes out every week on the Digital Byte Show. But what I have a small request. We'll be doing another show like this for you listeners in January. Please contact the Badger, contact her, and let us know your queries and questions, how we can try and shine a bit of light. You know how to get hold of us. My name's Jonny Fry, JONNYFRY. You got James Tiley, JAMESTYLEE, and the Badger. We're all on LinkedIn, and we would love to get your queries, and we'll try and answer them as best we can on the next time we're back on the airways.
Yep. Well, thank you very much, gentlemen. You Have a super fabulous day. And we will be back again in January, and we will talk about what the year will hold, our predictions.
Whey.